Kind of to that end too, there's some big news shifting back into the crypto world. A lot of what we do with our moves lately has been, through apps on the blockchain directly, such as GMX, such as like Cap or Gains Network. These are all market like DeFi marketplaces that you can access directly from your wallet. And everyone is a lot of people are aware that like doing transactions from your wallet costs network gas. So when you're doing a transaction on Ethereum, for example, a single transaction can cost you between like $1.50 up to like $20-$30 just to broadcast the transaction. It's quite expensive, especially if you're making, $100 positions. You're not trying to spend 30% of your position size in network fees. So, in order for the crypto markets to kind of function the way that they currently do, there are a lot of layer 2, is what they're called, blockchains. So these layer 2s are similar to like we talked about how Binance has its own chain at the beginning of the stream, like the Binance Smart Chain. That is a layer 2 blockchain. And what that means is that you have, within this layer 2, you have assets such as Ethereum that can be traded within this new layer, and therefore much in this different fee environment. So it doesn't cost you the same amount to broadcast transactions, but this Ethereum that you're trading is now a representative of Ethereum on Ethereum chain. So it's not actual Ethereum. Ethereum lives on its own blockchain. So if you're trading Ethereum on a chain like Binance Smart Chain, then what you are actually trading is it's called a wrapped asset. So what that is it's Ethereum that's issued on the Binance Smart Chain usually by a smart contract, by what's called a bridge contract. And the way that works is, in order for the bridge to issue one Ethereum on the Binance chain, it must hold one Ethereum on the Ethereum mainnet. And so if I want to move my Ethereum to Binance Smart Chain, I would have to first send it to the Binance bridge contract wallet on the Ethereum network, and then it will give me it will lock this Ethereum and it'll issue it to me on their smart chain. Now I can trade it, do whatever I want in this fee environment over here, and once I'm done, I can lock it back into that contract and release it on the blockchain on Ethereum. So whenever people are using assets like that are bridged in this way, they are exposed to the risk of that bridge contract being exploited. So if, for example, I move my one Ethereum from Ethereum into Binance Smart Chain, and then I'm trading it on Binance, and I trust that I can always move it back, but the contract that holds my Ethereum becomes compromised, and this Ethereum is stolen, I still have my one Ethereum, but it no longer has a backing in real, Ethereum on the Ethereum blockchain, and I've effectively been robbed.
Yeah, exactly, and we experienced this firsthand on this other chain called Harmony, where the bridge was hacked. So basically, all the wrapped assets that we had was worthless.
And so it's worthless. So when you're dealing with these layer 2s, those wrapped assets are not limited just to Ethereum. So, for example, in this bridge hack that Sid is talking about, that is the Harmony Horizon bridge. And it was hacked by the Lazarus Group, which is a hacker group funded by the North Korean state. And they basically, that bridge contract was holding Ethereum, Bitcoin, US dollar coin, DAI, stable coin, US dollar tether. All of those different assets that were being traded on the Harmony blockchain were all backed by their counterpart within this bridge contract. $100 million of that was stolen. And suddenly all of the assets that were over on the Harmony chain became, and still to this day are, depegged or no longer one-to-one with their counterpart, because the counterpart no longer exists. So all of that backstory, just to give you the piece of news that I'm really excited about this week. Circle is the parent company of Coinbase, who we already talked about has some news this week of being sued by the SEC. But Circle is the issuing authority of the stablecoin US dollar coin, or USDC, which is, I think by trading volume, the most active US dollar pegged stablecoin in the crypto markets. So that's basically the dollar asset that most people trust. That coin or Circle is going to be issuing their US dollar coin directly onto the Arbitrum layer 2, which is an Ethereum layer 2. So you can do Ethereum DeFi transactions on this layer for much, much less cost than it costs to do Ethereum transactions on mainnet. And now, starting not tomorrow, on the 8th, 2 days from now. So starting June 8th, the US dollar coin will be a natively issued token on the Arbitrum layer 2 blockchain, which means there will no longer be a bridged contract holding all of the USDC that can be exploited. And so holding US dollar coins 2 days from now and into the future on the Arbitrum layer 2 is about to get a lot more secure. I'm very excited to see that happen.